Hey everybody, it's Connor with Honor. I'm here at Realty One Group in Santa Clarita, California. Of course, my offices are Valencia, above Pottery Barn at the mall. This is your real estate update. Today's going to be the 19th of September, 2022. That's a lot, but that's where we are. Getting close to Christmas, real estate's feeling that push. We're also seeing that the home prices are coming down just a little bit from where they were at market peak about 2 3 months ago here in 2022. We're also watching, though, as interest rates are creeping up a little bit more. The Fed is going to meet tomorrow, Tuesday, the 20th. I'm pretty sure I'm correct on that. I've been watching different news portals. There's been some dates, whether it's Tuesday or Thursday. The opinion is they're probably going to increase the bank borrowing rate to an additional 1%. And that's to try to offset inflation. We'll have to find out where that goes. Usually, though, if you're a home buyer, that doesn't hurt you. That actually could help in a way. Plus, of course, try to battle inflation, right? But it could actually lower the rate that the banks charge to get mortgages on houses. So we'll keep an eye out on that. Right now, rates are just a little bit over 6. And of course, our inventory here in Santa Clarita Valley, Simi Valley, and also greater Los Angeles areas is a little bit higher than we saw 2 3 months ago, yet on the low side as far as what we call absorption rate. In real estate, the absorption rate is the rate at which homes are sold and how long it would take to get the inventory we currently have to zero. So, that being the case, we're about 2 months from zero. In a healthy market, that's usually 6 months till we have no more houses to sell. And that's, of course, the way that the mechanism works. Absorption rate would be if no new properties came on the market. So basically, at the current rate of sale, how long is it going to take to get rid of all the listings that we currently have as fast as they are selling and then get to zero? So that's absorption rate. So that's kind of how we gauge the market when we're looking. And right now, it's still a seller's market, but the buyers are gaining just a little bit of advantage when it comes to maybe asking for closing costs or additional repair credit on properties where before the sellers weren't wanting to do anything. Now that's been changed, and sometimes the sellers are a little bit more negotiable. It also depends on the property. It depends on how your agent plays it as well. If the agent goes in guns a-blazing, there's usually an issue, and sometimes that offends folks. So you gotta, as agents, we have to definitely be more balancers, if that's even a word, and I like to say that, and also non-emotional. We have to be center of the target. We have to be nice and relaxed. We have to just educate our clients and let them make the good decisions. And if they're about to make a mistake, a good agent's going to step up and say, you know, Carl, probably I wouldn't do it that way, but this is why, and this is the way I would approach it. Usually people are incredibly receptive to that kind of approach instead of, really, you're going to do it that way? You get what I'm saying. All right, so let's talk about Santa Clarita inventory. 490 units currently on the market for sale. And of those, coming soon listings are down to 10. One thing that I have noticed as well, price reductions are starting to be kind of a normality in this market. And I'll give you this. In the last 7 days, we've had 87 properties have their prices changed. Of those, 80 were reductions from listing price from that where that was. Now, some of the changes aren't very big, maybe a couple $1,000s. I know that is a lot of money. That's big, but not like 20 or 40 or 50 or $90,000 in reduction. However, it's not because the property isn't as valuable when they put the property on the market as when they listed it, that particular pricing strategy. But it is that the market has changed somewhat because now we got through summer, school's back in session, now we're getting into the holidays, so real estate typically does slow down during that time, and then it's going to pick up first quarter next year. If you're a home buyer, now is a pretty good time to start looking because when we get into next year, you'll probably see a positive push towards real estate prices and they will get a little bit higher. So now isn't bad. Also, if that Fed increasing the rate, if they actually do, the bank rate, the one that the banks are borrowing money, what their rate is, and if that does have a positive impact on you wanting to get a mortgage or origination loan, it lowers that rate below 6 into the early 5s, maybe high 4s. That's also wonderful. One final point within the new housing communities, we're finding that there are incentives there when you're represented, even when you're not. But what we do is whenever I have clients interested in new housing, I'll take them out for a tour, and then I get to be the negotiator for them and help them get the best price possible with the best options. So if you're looking for that, please go to scvnew.com, scvnew.com. I'll be happy to take you over to Williams Ranch up in Skyline, all the new different housing here in Santa Clarita Valley, and walk you through it with their representative and me. I can explain and ask those questions that are very good to be asked and give you full information about the property so you know what you're getting into. Now, looking both at Skyline and Williams Ranch, I was at both of them yesterday. Skyline has a little bit higher Mello-Roos, depending on where you are. This is going to be one of the particular new housing. They do have inventory. They're not close to being phased out. They're about halfway through, so that might be a good option if you want to go look at those. Those are priced somewhere $1 million, a little bit higher. Just depending on the residence. And then Williams Ranch, about the same price point, just over $1 million. Different feel for both. I did feel that Williams Ranch seemed to be more spread out. Houses weren't as close together. The lot sizes were bigger. Also, with the particular builder, there were certain things that were actually part of the house that were not upgrades. They were not extra fees for you as buyers. The houses already had them. And one of the things that I thought was exciting, and maybe you men out there or women out there that are familiar with construction, they still used hot mopping over at the Williams Ranch, which is very positive because that really gives one of the best seals for shower pans and that sort of thing. I was very excited to see that. How nerdy. Anyway, I hope everybody has a fantastic week. I am Connor with Honor. When you're ready, reach out to me. I want to be your realtor. And don't forget to save my number. You never know when you may need it. Thanks for watching the update. The market is ticking along just fine. When you're ready, reach out, and I will get you all set up with what you'll need to make the best real estate decisions. I'm Connor with Honor, over and out.